Thank you. It's James Ward. I'm the Finance Director of IMIC, International Mining and Infrastructure Corporation. We're an AIM company. Had a very interesting sort of tail end of 2011 and interesting start to 2012. I thought we'd tell you something about it, and then you can hopefully track the company as we continue on our development program. We believe we've got a very good and innovative approach to iron ore in Africa, and that's looking at it from an infrastructure perspective as well as an iron ore perspective. Okay, so we aim to become a major Pan-African iron ore integrated company with mining and infrastructure projects. We're currently on AIM with a market cap of about 17 million. As I said, it was a cash shell tail end of last year. In December last year, we signed a heads of agreement with our major partner, who are the African Iron Ore Group, and more about them as we move through the presentation. In December, we also signed an agreement through the African Iron Ore Group with the government of Guinea in respect of the Simandou South infrastructure project, and that's the Rio Tinto mine in the south of Guinea, and it's the infrastructure solution to that mine that we have an interest in. And again, we've got a couple of slides to tell you about that, and we'll go through that in more detail. In January of this year, whilst we're still a £1 million shell, we managed to attract a very high caliber board, and also because we're looking to take this company from AIM to a company that has a number of hundreds of millions of market cap over the next couple of years, we put an advisory board together. The advisory board is made up of eminent people who will sit alongside the actual non-execs and execs of the company. There was actually a problem with our presentation, and the chap from Minesite is just handing them out now if you don't have a copy. In June of this year, we completed a private placement for 10 million sterling, $16 million. This was, in effect, a friends and family round, given the state of the capital markets. But for us, we're very proud that in a difficult financial capital market situation, we managed to get away such a large placement, which has taken our market cap from 1 million to 17, 18 million sterling. And then in July of this year, we made a small investment off market in ferro mining as one of the juniors that we've started to take an interest in. Our strategy is to focus on unlocking the value of Central and West African iron ore opportunities. We're leveraging off our relationship with African Iron Ore Group, and we're looking to capture value uplift in the juniors that will be unlocked through the provision of infrastructure solutions. Key for all of these juniors is that there is a credible infrastructure solution, and that should see significant uplift in the price of the juniors. And what we're looking to do is to try and capture some of that uplift by taking stakes in some of the juniors where we believe we can unlock some of the infrastructure solutions. We're anticipating a strategic investment in probably between 3 and 5 juniors over the next couple of years. So who are the board? You've got 2 executive members of the board. They've got, sitting in the front is Haresh Kanabar, who is our chairman. Haresh is an experienced chairman in the AIM sector, including a number of natural resource companies. He's also a qualified accountant. I'm the finance director. I've been advising AIM companies over the last 10 years. My previous background was with Vinci, one of France's largest construction and concessions companies, looking at infrastructure and project finance. And I've also had exposure to the coal sector. We have 3 non-execs, and I think it's just worthwhile taking you through these non-execs. And they've come on board with a token compensation of somewhere around $25,000 per annum, but they are committed to the concept that we're looking to develop, and they've come on board at the very early stage, and I think it's something that we can take a lot of comfort in our business plan and our strategy, that we've managed to attract people of this caliber. We've got Dr. Lukman. He's twice General Secretary and Chairman of OPEC. He was previously the Nigerian Petroleum and Mines Minister, and he was also a founder of Afrin, which we'll come on to because there's some connections there. Afrin started as a £12 million market cap company in 2005, wanting to become a pan-African oil play, and it's now on the FTSE 250. We hope to do something similar in the iron ore space. We've got Dr. Babacar Nadayi, Ambassador at Large of Senegal, and he spent a number of decades at the African Development Bank, latterly as president where he served 2 terms. Again, African Development Bank specialises in large-scale project funding, lending to projects in Africa. These 2 elder statesmen in West and Central Africa have the ear of most of the influential government figures across the region. And we've got Andrew Macaulay as a non-exec director. Andrew spent a number of years at Continental Coal, and he's now a partner at Blackstone Resources. He helps us with our capital market strategy. And I think it's interesting as we come onto our advisory board. We've got Andrew Buxton, who is previous chairman of Barclays Bank. We've got John Negroponte, the Deputy Secretary of State in the US and former ambassador to Iraq. Magnus Eriksson of the Raw Materials Group, who I assume most of you here in the room have either heard of or know personally. And we've got Carlson Ven, who is a partner of Jones Day, the international law firm in Hong Kong, but importantly a member of the People's Congress of China. This play that we're looking at evolving has a very strong Chinese angle to it. The Chinese are likely to be the people who would fund any form of infrastructure in China, in Africa, and the Chinese are the end customer for iron ore. The advisory board have actually met twice this year so far, so it's not just a name on a sheet of paper. They're actually used and they're actually linked in quite closely to the company. So a little bit about the global iron ore market. It's effectively a China-led demand. Whilst the price has suffered recently, it's still anticipated that the price should go back up to somewhere around $110, $120 a tonne, and at that price, a lot of the projects we're looking at we consider to be financially feasible. China takes approximately 70% of the world's seaborne iron ore supply. Chinese demand is increasing. It's not increasing at the rate that it's previously increased at, but it's still increasing. And we've seen recent announcements by the Chinese government to try and develop further construction projects in China, which hopefully will see further demand to iron ore. Currently, the iron ore is effectively all out of Australia and Brazil, with little bits out of Africa. Africa is the last continent with significant reserves of iron ore that are untapped. And there's a chart of just some demand that's forecast. And again, this has come from the Raw Materials Group. Okay. So we have the emerging Central and West African iron ore sector. Before the tectonic plates moved, this was all linked into Brazil, so it's high quality iron ore, very high quality grading. The problem is there's a lack of infrastructure in Central and West Africa. We believe that there's a potential for the region to produce another 400 million tonnes if all the iron ore projects started. Obviously that's not going to happen overnight and it's not all going to come on stream, but there is, it gives you an idea that it could mirror Australia and Brazil in terms of the size and production. We've listed out a number of iron ore projects in West and Central Africa that total sort of 400 to 650 million tonnes. And you'll see that there are the 2 hubs. You've got the hubs around Guinea and Sierra Leone, and you've got the hub around Cameroon, Gabon, etc. Again, this is all publicly available information. So coming on to us at IMIC and our strategic partner, who are the African Iron Ore Group, Their objective is to become the infrastructure solutions partner and provider of choice to African governments and mining projects. The chairman, founder and largest single shareholder is Ethelbert Cooper, also known as Bert Cooper, who was the principal founder of Afrin. They've demonstrated an extensive regional network with offices in Mauritania, in Guinea, Senegal, with access across key African decision makers, and they are currently in dialogue with approximately 8 African governments at various stages. We have signed a relationship with AIOG, which defines the framework for us to work together. We are, in effect, the African Iron Ore Group's equity provider of choice. We have the right of first refusal to fund any infrastructure project that comes along that is developed through them in West and Central Africa, and that's an exclusive relationship. In order to kick this off, we had a 10% cross-shareholding swap initially back in March, April of this year, with non-dilution provisions. Because IMIC is migrating from a small cash shell into a fully fledged company, AIOG are taking a business development role until we have a full team on board in IMIC. And IMIC is entitled to 25% carry of any of AIOG's free equity and SPV projects. And again, we'll come on to that when we look at the Guinea project, just to explain how that works. Most importantly, we've talked about we've got the right of first refusal to fund any projects, and we have a call option in 5 years' time to acquire the other 90% of AIOG that we don't own at a discount to their current market price. The key for this is that in 5 years' time, we believe that the requirement to have a private and public company will no longer be necessary, because we would have hit a critical mass, and therefore we would look to merge and to become one company. And that's not a cash-out deal for AIOG, our partner. It's a bringing together of the two entities on a share-for-share exchange. AIOG and we have put together a number of key Chinese partners. As I said before, China is key to this. We've got the China Railway Group, specialising in the building of railway and ports. They've built over 100,000 kilometres of electrified railway line in China. The China Machinery Engineering Corporation, who specialise in power. The China Hui Group, who specialise in beneficiation of iron ore. And the Chinese, because they produce such low quality domestic iron ore, are experts in beneficiation of the iron ore. And we've got the China Railway Materials Company, who have said publicly that they would look to become a significant shareholder in IMIC at our next fundraising round, and also who would have some marketing rights to iron ore into China. Interestingly, the China Railway Materials Company invested about 250 million in African minerals a number of years ago, and have seen an uplift in their price. Moving on to the first project, which is the Guinea project. Let me just turn the mic this way. We have a relationship with the government of Guinea. Where AIOG have the right to look after the infrastructure of all mining projects in the southern corridor of the banana shape of Guinea. The first project we're looking at is the Simandou South project, which is just up there. Rio, the IFC, and Chinalco are the mine owner, and we have the relationship with the government to look after the infrastructure for that. It's going to require a 650-kilometre railway, a deep water port, power, and everything else that's required. The Simandou South iron ore project is probably one of the world's largest undeveloped iron ore deposits. It was key in Rio's defence to a takeover a couple of years ago by saying that the real value of Simandou wasn't reflected in Rio's share price. It contains one of the highest grades and largest single iron ore deposits. and it will probably require the largest mining-related infrastructure ever developed in especially West and Central Africa. The total cost at the moment is currently estimated at about 10 billion, and these are numbers from Rio, and that's approximately 8 billion for infrastructure and 2 billion for mine development. Rio have publicly stated to the government of Guinea that they would like to try and commence iron ore deliveries in 2015. It's likely the first of those will be actually trucked in, and then the railway will come shortly thereafter. And at full production, Simandou South is anticipated to produce just under 100 million tonnes per annum. What am I doing for time? Yep. So, coming on to the actual agreement we've got, because there's been a lot of press coverage about us and exactly what we have in respect of the Guinea project. You don't have a pointer, do you? No. Okay. So what we have is the top half is the mining rights, and you have Rio, Trinalco and the IFC own the rights to the mine. The government of Guinea has the right to take up to 35%. Part of that is free carry, part of that is pay for at cost. The interesting bit is the dotted line across the middle. Okay? Below that you have the infrastructure project. And the government of Guinea was very clear when it signed up with Rio that it was separating out the mining rights from the infrastructure rights. So there's an entity called SPV Simfer, which is created. That entity is to be 51% controlled by the government of Guinea and 49% controlled by the mine owner. Therefore, the government of Guinea gets control over how that project happens. And the government of Guinea is very clear that it wants it to be a multi-user, multi-purpose railway, not just for Rio Simandou project, but to open up the country as a whole to a number of mining projects and a number of other commodity products that are in the South Corridor. So what we have at the very bottom of the diagram, which I can't walk away from the mic for, but you have AIOG/IMIC at the bottom who have 40%, and Sogipami who have 60%. Sogipami is the government's parastatal entity that is 100% owned by the government of Guinea, that will own and control all of the government's infrastructure rights to in Guinea. Together, Sogipami and AIOG have come together and formed a company called International Mineral de Guinea, and that company is the shareholder in SPV Simfer as its first investment in Guinea infrastructure. IMG will hopefully own a number of other interests in infrastructure projects in Guinea, but the first one is the Simandou South project. And Babacar Nadayi, our non-exec director, is actually a board member of IMG and is actually hopefully going to be on the board of SPV Simfer too. So IMIC have a direct relationship there. What we have is a free carry to the government of Guinea, because it's going through highly indebted nation status at the moment and actually secured it yesterday in part. It cannot take on any sovereign debt and it cannot provide any sovereign guarantees. So what we are doing through AIOG and our Chinese partners is to effectively find an innovative funding method and solution that enables the funding of this project without a sovereign guarantee being provided by the government of Guinea. If we can do that, which we believe we can, then we would own, through AIOG, 40% of the project vehicle, and IMIC would have a free carry on 25% of that, so 10%, which is in effect a 5% direct interest in the project, SPV Simfer itself. That's on the basis that there's no equity required in this project and it can all be debt financed. That's unlikely to happen. It is likely that there will be a small amount of equity required, in which case IMIC has the right to use the London capital markets to fund any equity that's required in the project, and for that we would get a commercial return. If there's also an element of free carry to AIOG through that process, IMIC would get its commercial equity and also 25% of any free carry that AIOG is left with. Our second investment is a very small investment of 2 million sterling. We've got just under a 4% stake in Afera Mining, Canadian and AIM listed. Cameroon assets. Usman Khan, who is the vice chairman of AIOG, but previously was the Mauritanian head of SNIM, the Mauritanian iron ore producer, was actually appointed a number of months ago to the Afera board as a non-exec director. And I think the market recognises that Afera is currently trading at a discount, significant discount to its net asset value because of the infrastructure solution and needing to further work that up. So in summary, we believe that we've got a unique opportunity to participate in the emerging Central and West African iron ore space, looking at it from not just a mine owning, but an infrastructure owning perspective. We've got a clearly defined strategy. We've attracted a high calibre and well-connected board, an advisory board. With our strategic partnership with AIOG, we've got access to the key African decision makers and a proven track record. We've linked in with the Chinese. In the last 12 months, we've raised 10 million sterling. We've announced the first project, which is Rio's Simandou South for the infrastructure. And the second project was a very small investment in Afera. We have a 5-year ambition to become a diversified Pan-African mining and infrastructure company with a portfolio of infrastructure and mining projects leading to access and possible control to over 100 million tonnes of iron ore. And look forward to speaking regularly here as we update you over the next 5 years as to how the company has performed. And I thank you for your time this morning.
Thank you very much, James. Do we have any questions? That was an interesting presentation. One at the front here.
How much is this railway going to cost, and does it go through things like tribal hunting grounds and the like? So consents might be a little bit tricky.
Well, the railway is likely to cost, well, the railway, the ports are likely to cost about 8 billion. And yes, they go through a significant amount of difficult terrain in the south of Guinea, swamps, mountainous regions, etc. But we have the government on our side, and the government is very keen that this actually happens, because the government requires the foreign dollars that will come from the ability to see a route to market for the iron ore. You've also got to remember Guinea is a country with a tiny population of sort of 14, 15 million, and a tremendous amount of space. So we don't believe it's that those issues, whilst they are live issues, are anything that we cannot overcome.
Any more questions, ladies and gentlemen? Oh, several.
Well.
Guinea as an operating area with recent mining rights, etc., which are still under negotiation, haven't been confirmed yet by the new government. Political unrest there at the moment. You've based your company around this particular asset, which was in the newspaper yesterday, for Vale walking away from it, purely and simply because of the difficulty in operating there. Your train line, which you've just said is going to cost so many billions of dollars, is obviously on the back of all of these large operators willing to take up and develop this particular area. Is it all a little bit at the moment up in the air, considering you're basing your whole structure company on the infrastructure of Guinea and the political operating?
It's a very fair point, and let me answer that in a couple of ways. Firstly, we said we're Pan-African, so we're never going to put all of our efforts into one location. The major project undeveloped in that area is the Simandou South project. Okay, so we have an interest in that project which we're looking to develop. Yes, there's political uncertainty, but there is a new government that's been around for 18 months, 2 years or so. Yes, you've got some of the majors starting to walk away, but you've also got Chinalco, who paid about $1.4 billion to Rio for access to that project. I can't see Rio walking away from that project, and I can't see the government of Guinea allowing it not to be developed. But we're looking at other locations. We mentioned that we're looking at 8 other jurisdictions in Western Central Africa, and the aim that we have is not to put all of our eggs in one basket, and it may be that different projects come along at different times and with different timelines, and we have to be diversified because in that part of the world you have to.
Yep, question there.
Thanks. Just on the Cameroon prospect, how much time are you guys actually spending on Cameroon, and do you have is that a reflection on whether you think the Sundance takeover is going to go ahead and they'll get the rights, or what's your view on how that area develops in the next few years? Because obviously they've planned the corridor, they've got all the permitting. It's just a case of financing the railway.
Well, I'd say that if the market believed it was all going to happen, then the Sundance share price would be slightly in a different position to where it is at the moment, and possibly the Afero price might be as well.
But how much time are you guys planning if that doesn't work?
Well, as we said, we're speaking to a number of governments and at various stages of development with each of the governments, and we're also developing infrastructure proposals for a number of the juniors that may be impacted as a result of us being able to achieve government consents. But I don't want to say anything else at this point in time on that.
Yep, at the back.
Might you bring us up to date on what's happening with the Steinmetz Group and the other South African chappie that lent the government of Guinea $35 million?
Again, we have the project with Rio and the infrastructure for that project. Everything else that's happening in Guinea relating to the mine and the mine rights is for them and the government of Guinea to discuss. As far as we're concerned, the ability of Rio to operate the Simandou South mine, the permits and licenses are all there for that, and we have the rights to develop the infrastructure from there. What happens along the way will hopefully, if we can get the railway done, will encourage the other operators to sort out their issues with the government and to come and hopefully join within our project.
Lawrence has got a question there.
Power provision's a very interesting subject in West Africa. I just wondered, in mind with the fact with your partners, what are the options you like in West Africa, specifically Guinea, for power provision and how you might develop that?
So can you repeat the question? I didn't hear the last bit.
Basically, what do you think the best routes forward for power provision are in West Africa, specifically Guinea? Which particular ways of doing it do you think are the right ones?
Well, I think I've told you how we're looking to do this. It will be Pan-African. We believe the government of Guinea is becoming a lot more professional in the new regime, and that they now have proper legal counsel, which they didn't before, and that they are conducting themselves together with the aspects that are happening with the UN and the World Bank to get high designation status should see the country develop and grow.
Yeah, there's a question just in the corner over there, Sophie. I think we'll break for coffee after this.
Yeah, I'm just wondering, as an investor, how do we look at you? Are you a boutique financing operation, or if I buy your shares, am I just going to get rounds of dilution directly into the London entity, or are you looking to be raising financing elsewhere? And where's the payback to an investor? Is it dividends from the projects, or do we just hope the NAV goes up over time?
We are somewhere between a miner and an infrastructure owner, and as the company develops, we will look to try and move the rating as where we're held on the stock exchange towards mining and infrastructure, as opposed to a financial services company, which is where we are at the moment. Yeah. We are not looking to invest in projects where we don't believe we can have an influence over the infrastructure. So we're not competing with the likes of BlackRock's Natural Resource Fund and playing with what we consider to be undervalued juniors, where somebody else might provide the solution. we are looking to take stakes where we believe we can see uplift along the way that comes from having improving infrastructure solutions, as well as directly in the infrastructure projects themselves. So yes, infrastructure projects themselves have a long-term annuity cash flow income that comes out of them, but we're also hoping to capture the uplift in the underlying share price of the juniors within our investment portfolio and see capital growth. So yes, the price return for shareholders should come from the net asset value of the company going up, as opposed to profits from selling of the stakes. We're not looking to exit the stakes.
So we have to kind of dust off our Macquarie fund prospectuses to figure out how it's all going to work, right?
Well, I think we're an early stage company. We've gone from 1 million to 17 million. Yeah, we've got 2 investments, and as time goes on, it will be easier for the market to look at us and to make those assumptions that you're clearly looking at. But I think we're quite unusual in the space that our share price has actually gone up this year. And we raised the money at 20p, and we're sitting at sort of 28, 29, sometimes 30 pence on thin trading.
Okay, I think we'll wrap it up there, a break for coffee. Thank you very much once again to James Ward of IMIC. Thank you very much.